Let's hop across to Amnish Aggarwal. He's the head of research at Prabhudas Lilladher. He joins us now with his view on the markets and individual stocks. Amnish, hi, good morning. I wanted your thoughts first on the two-wheeler space because some very strong numbers coming in from the likes of TVS Motor. But on the flip side, rural-focused plays like Hero continue to, sulk a bit. How do you approach this space now?
Yeah, good morning, Sonia. You see, if you look at TVS, even in the past, say, 6 months, 12 months, or 1.5 years, TVS has been outperforming the industry growth. And this is, you can say, in the bikes as well as in the EVs, which they launched last year. Now, in comparison to it, if you look at, say, Hero has been doing well only from past few months, particularly, I think, it was more around, say, Diwali that the sales started picking up for Hero. That is one. Secondly, the rural centricity for Hero is more. And thirdly, one reason which is being given as of now is that the Navratra has got shifted this time from March to April. So that might have impacted sales of Hero in the current month. And this doesn't indicate any big change in the trend as of now.
Amnish, hi, morning. Just talk about one is, of course, Aditya Birla Fashion, where there is this demerger which has been announced, right? Now, we've had many discussions about whether there's a player in the field, trend, which of course has been growing fantastically, both the business and of course the share price as well. And you've got ABFRL, which has been lagging, sulking. Just wanted your thoughts on ABFRL. What will this demerger mean? I'm not sure if you got coverage, but if you can react to the news at least.
Yeah. You see, ABFRL has been following a very aggressive strategy. The strategy of Trent and ABFRL has been a contrast. While Trent is more private label focused, it has got Westside and Zudio, which is now a key growth driver for the company. In contrast, ABFRL merged Madura, you can say, brands into Pantaloons, and then they went on to acquire, you can say, a lot of brands. They practically entered each and every segment. Now, I believe the reason why ABFRL has not been doing well over the years, first of all, there is a lot of, you can say, spending which is going on entering new segments and brands. That is one. And the second is that due to this, there have been frequent equity dilutions, as well as because the new businesses continue coming in, the performance of Madura over the year has got overshadowed. Now, Madura, if you look in isolation, I think it is perhaps the best brand in the, you can say, male formal wear as well as in the casual wear. The size is there, the profitability and margins are there. And my sense is that this demerger will actually separate the two business very classically. One business which is more brand oriented, EBO and LFS oriented, and the second business which will be more centered around Pantaloon and its, you can say, light segments. So I think this is going to definitely unlock shareholder value, and I think one can expect better returns to come from ABFRL because the stock has not done anything from the last 2 to 3 years.
Indeed, Amnish, one of those big underperformers actually. In fact, the market cap of Trent is now 6-7 times of ABFRL. So seems to be a step in the right direction. And as you're saying, this could unlock some value. Amnish, I also wanted to ask you about Bajaj Finance. There was an article that suggested their housing subsidy could unlock some value. And the valuations were, they're talking about $9-10 billion approximately. Some on the street believe that's way too high. But let's see how that goes. For the last 1 month or so, the stock, I think, is up close to 12%. And it's outperformed the Nifty Bank, the Nifty Financial Services Index. What's your view on Bajaj Finance? It used to be a darling, then it went through a phase of underperformance, and now it seems to be bouncing back.
You see, Bajaj Finance is a great business, but the only, I think, factor which one needs to look at is what kind of price to book we are paying to the business. So the business had got a price to book of, say, 7 times, 8 times people, and the street was even willing to give, say, 8 to 10 times price to book to Bajaj Finance. Now, there is no problem with the business. Business has been doing well, but here 2 things come in the way. First of all, any guidance from RBI in future for converting a company called like Bajaj Finance, given its size and scale, into something like a bank. So if that happens, then the price to book value of this company in the longer term can come down because no private bank, even the best of them, is quoting today at more than 2.5 times. The second is, even if you look at, say, housing finance companies, now the biggest housing finance company, HDFC, has got merged into HDFC Bank. Now, in the rest of the pack, today, if you look at the NBFCs, housing finance, or even the, you can say this, the small finance bank, all this entire pack gets higher multiple than banks because they can potentially generate better ROA and ROE, and they can grow faster than some of these large banks. But having said that, if you look at, say, the trend of last few years, the price to book of whether these are, you can say, NBFCs, housing finance or others, that has actually drifted down slowly. And I see that the same trend will continue. Having said that, Bajaj Finance had fallen, I think, something like 35% from the peak. And so it is, you can say, showing some sort of a rebound. Now, how far value unlocking housing finance subsidiary can do it, only time will tell. But having said that, post the merger of HDFC Limited with HDFC Bank, now there is no very big housing finance company which is listed except LIC Housing Finance. So that makes some way that if Bajaj Finance, you can separately list the housing finance company, it can unlock some value. But in the longer term, I'm not very confident about the price to book value these finance companies can hold on to.
Okay, well, I also wanted your thoughts on IRDA because there was a very strong loan growth that IRDA, reported. But I'm going to give you some time to ponder over that. In the meantime, let's also talk
With us, Amnish, just a quick word on, a few of these movers from yesterday. So you had UPL, which was one of the big gainers. We had two credit rating agencies with us yesterday at the program. And one of the sectors which they highlighted, perhaps which according to them, both of them, ICRA and CRISIL, which perhaps is set for a bit of a revival in the second half of this year, that's FY25, is agrochemicals and specialty chemicals. I don't know if you have coverage on the space, but just wanted your thoughts.
Okay. Prashant, if you look at agrochemicals and specialty chemicals, I think the drivers are slightly different. Agrochemicals have been suffering on two factors. First being the patchy rainfall or the weather conditions throughout the globe. That is one. Secondly, the prices of technicals and some of the, you can say, the raw materials, the prices of those, they came down drastically and the guys were sitting on a lot of inventory. There's a problem with both, you can say, finished goods prices as well as with the demand. Now, having said that, by second half of the year, if this year's monsoon is good, there is no high cost inventory in the system, I think there is a probability that agrochemical companies might see some revival. And many of these stocks, they have actually, they have seen quite a bit of correction over the past year and a half. So many of these companies then can show some sort of a revival. Now, the second one you mentioned was specialty chemicals. So specialty chemical prices, again, they have seen a lot of correction. The Chinese, you can say, production is rising. And it all depends upon, it is not only the question of how the Indian producers do or how the production is, but also the global prices of the specialty chemicals. So till the time there is some recovery on that front, it is very difficult to take a call. Maybe few months down the line when we see Chinese prices stabilizing, you can say, and Indian companies again start to report some rebound in profits. So I think till that time, it might be, you can say, a slow move.
Okay. Actually, I wanted to ask you about IRDA as well. Any thoughts there? I mean, the loan growth was very strong, a 27% growth. And, this was a darling stock in the last 1 year or so. Do you think it can resume its uptrend in a big way?
Yeah, Sonia, two things here. First of all, if you look at particularly the Q4 numbers, their sanctioned loans are up by more than 100%. So that is. The second is, if you look at the momentum now vis-a-vis the full year, it clearly shows that particularly in the second half of the year, the total sanctioned loans, they have increased significantly, and it's in line with the policy to, you can say, propagate more of the renewable energy. So while the impact on the actual disbursements and financials will flow over the next couple of years, but the trend definitely is positive, and so it suggests that the loan growth also for IRDA should move up from here. Now, in terms of stock price, I think the stock continues to be quite expensive when it comes to the price to book. So it might give you, you can say, some up move on this news, but whether it can sustain these kinds of valuations over the near to medium term is something which is very difficult to justify at this point of time.
Okay. Just stay on. We'll come back to you in a bit.